Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacey.
Hey, welcome in. We are so glad to be back, and we want to chat a little bit about what we've been doing.
Yeah, so fall is officially here. Summertime is always an amazing time here in Canada because the weather's so nice. But yeah, we're not just your infinite banking advisors. We have our personal lives too. So we just want to have a little candid chat about that. And if you are someone who likes to watch podcasts, you can actually head over to our YouTube channel and you can watch this conversation. I know for me, when I'm sitting at my desk working, I have a couple different podcasts that I actually prefer to watch. So check us out on YouTube if you are one of those people like me. But Winnie, what did you get up to this summer? What does non-work Winnie look like?
Sometimes it's pretty hard to squeeze that person out, I tell you. But yeah, when the summer does arrive, and interestingly enough, I feel like there was almost like 3 months of summer this year because September was incredibly warm. And so really grateful for that. And I happen to really enjoy the outdoors. I don't sleep in tents anymore. Not unless I truly have to, but I'd like to do car camping and I keep it simple. And I can do it simple now because I don't have kids to contend to that require a trailer or anything like that. So I was able to visit the David Thompson area. I've driven through it a number of times on road trips back and forth. But this particular year, I got to actually stop, sleep under the stars, breathe in the fresh air, swim in some of the lakes, put my feet in some of the water. That is such an amazing area to, you just feel like, it's a slice of heaven. It definitely is. Mm-hmm.
Yeah, that's cool. I know when you shared those videos, that's definitely a little road trip that I would like to go on. So summer, what did it look like for me? Lots of time riding horses with Sid. So that is, if you like over the years when questionnaires have came home from school, like the kids answer, what does your mom like to do? And it's always ride her horse. So I have spent a lot of time in the saddle this summer, which was a goal of mine. So I'm glad that I carved that time out to do that. We are putting in an outdoor arena at our place. That has been 21 years in the making, a 21-year dream of mine. So we're finally doing that. We are building a barn. That is also, we built a barn at our acreage years ago, and it was just my utmost favorite place. So being able to build a barn again is another dream come true. So my heart is happy with that.
Well, before you continue, what are all the things that you're happy about? It's always been a dream of mine to have a friend that has a barn and some horses that I can come visit.
Well, bingo, you won the jackpot. Yeah. So that's super exciting. Yeah. And then, Sid wanted to go camping. That was her one request this summer. We didn't, go camping per se with our travel trailer, but we did go to the Clearwater. So if you're, familiar with Alberta, and we slept for one night in a covered wagon.
That's awesome.
It was an experience. Would I do it again? Yes, I would do it again, but I think I would be a tad bit more prepared because around 1:30 in the morning, I was pretty achy. So it's not ideal. So that was cool. I think all in all, we had a really great summer and the weather has continued to stay warm and support my dream of continuing to ride. But one other thing that I want to say that I did, and I just want to like encourage everybody, I ditched my Apple Watch.
Yes. Oh, okay. Well, in talking about what I did on a personal level that happened to fall over the summertime, is that for the month of July, I challenged myself to leave my cell phone outside of my bedroom. So I let my bedroom become a no cell phone zone, right? Because I think I allowed myself to get into a habit where I have it right with me, right till the very end of the day, checking in on things. And then of course, the first thing I do when I wake up, it's like my mind was already there. And so I tell you, creating that boundary for myself of no cell phone zone in the bedroom. And actually I bought like a $20 thing on Amazon where it's like the alarm clock is outside of the bedroom too. It's like nothing to do with my cell phone. It's just one of those, it's lit red, you set an alarm, and if you don't get up and turn it off, it just gets progressively louder. So
Nice.
And that was a total game changer in terms of how rested I felt. Like along with not having that cell phone was also not doing my best not to touch any media whatsoever until noon. Sometimes, I could make it till 10, but noon was like, wow, it's so weird. If all of us attempted not to touch, like not to get on YouTube, not to get on, like just no social media whatsoever until noon, I think that our ability to focus and feel calm greatly increases.
Oh,
I felt that. I really did.
1,000,000%. And so that is part of why I ditched my smartwatch, because I listened to this podcast episode. Dr. Jody Harrington was on this podcast. I'd have to look back and see exactly which podcast it was, but she talks about how we are not made to have 48 million opinions flying at us every day. We're not made for the constant notifications, the constant comparison. And what I was finding in my day-to-day, and not just my work day, that my focus, I could not focus. And I'm not a person who's ever had a problem with that. And it was constant, like, so-and-so finished a workout. This person finished a workout. This person did this. This person's texting you. And I kind of just one day, I'm like, I'm so done with it. Like, Reed and I are having conversations about focus and about our phones and just what's important. And I've been saying for a while that I think I will just throw my phone off the river bridge the next time I go to town. And so, I just said, you know what? I'm ditching my watch. And I took my Fossil watch. So I bought this watch quite a few years ago, and I was very proud of it when I bought it because I do like wearing a watch. So I got the batteries replaced, and it's been a game changer. And I honestly don't think I'll ever go back to wearing one because, one, I know that I'm active enough. I don't need to track my steps and do all that. Like, I know that I'm active enough, or I know how active I need to be. And yeah, my text messages, if it's during the workday, of course, I'm going to be attentive to the people that I'm obligated to for my work. But other than that, like, I'm working and probably somebody else can wait, right? So I encourage everybody, ditch the smartwatch. You don't need it, and your focus will improve.
Right.
Quality of life.
Right. And I think that a lot of people will find that they're not as ADHD as they think. And I'm sorry for all of those people who check me out on Facebook or do all of those things. I don't even have social media on my phone because I turned off my notifications for a lot of things on my phone too. And so I do my best to be as responsive as possible, but I do not want to be like we don't like to be a slave to the lendy here, and that's what we preach. We don't like to be a slave to all of these things, right? And it really helps not only for our own personal sanity, but I think it also helps with creating a better environment for our ability to think, right? Our ability to make decisions with a little bit more clarity. So yeah, I'm 100% with you on board with that. And at the same time, before I go too far along with this, is that don't you find like a lot of people are using ADHD like it's just being thrown around. Like, and maybe a person hasn't even been assessed for being ADHD, but they think they're ADHD because it's just like the word is just being thrown around like it's candy. And then of course, going to your doctor, getting diagnosed for one. And then now you're talking about getting on some of those medications that ADHD is. And then and it goes beyond just the medication. Now we're talking about government supplementation, government benefits.
Right.
For being on ADHD.
Yeah, I think it's a rabbit hole. I honestly do. And so for me, and now I'm like, oh, I actually can't wait till I go and I look for my next watch I want to buy. Because like this one is a rose gold, but you know what? Maybe I want a black one or I want a silver one. I don't know, but I'm not wearing my Apple Watch again. Dude, did I love it? Yes. I loved it for certain things, but I grew to hate it actually because of the constant. And like, I remember a long time ago, this is getting kind of long, but my friend Chelsea said to me, she had sent me a text, like this is like when my boys were little. And I didn't get back to her right away because for whatever reason. And I said, oh, sorry, I didn't get back to you right away. She's like, oh no. She's like, don't apologize. She's like, that's what's great about text messages. It's not invasive. Like, just get back to me when you get back to me, like when you have time, right? And so I'm like trying to get back to more simple time, although I know that keeping up with time and the technology is necessary to some extent, but do I need 35 dings on my watch in an hour or in a 2-hour time span whenever I'm trying to focus and help people and be a good advisor? No, I don't. So I ditched it. And
I'm really happy to hear that you have. And, you know, one of the greatest challenges I think for each and every one of us is our ability to be present in the moment when we're with somebody. I've never worn one, but I've certainly been around you when you had your Apple Watch. And, you know, if we're having a conversation, do I notice when something's happening? Oh, you know, you're not. And I'm not upset at you for it. I'm just saying that it happens to anyone
it's a thing, right?
Yeah. Like, you know, you're with, and then you're not really with that person because all of a sudden, you see a text and now your head is somewhere because you're thinking about that you see.
Oh, for sure. And even when I'm driving, right? Like I notice like, now on my drives to town, I get to town and then I'm like, oh yeah, there's a few text messages. If I had been wearing my watch, I would have, read text. Oh yeah, the boys or whatever, right? So anyways, all in all, that is my experience with ditching a smartwatch. I don't think anybody will regret it.
So in sharing what we've had over the summer is, you know, we're talking about, it allows me to say, okay, I'm really grateful I'm happy to hear that you had a good summer. I'm happy that I had a good summer. I'm grateful that we both get to experience that kind of freedom, right? And zipping into becoming your own banker book and how this specific mindset, this type of like how we think matters, right? Because we're talking about, hey, if we want to be able to be present, we want to be able to enjoy our day-to-day life, right? We also got to protect our ability to manage our sanity around life, right? And whether that's taking the time off or doing little things to enhance the quality of our day-to-day life. Like for you, it was ditching the phone. I think I'm so happy you did that. Plus the fact that you get an arena and it just makes you like within minutes, you can step outside your door and you can be in your happy place. It cuts down all the different decisions that you need to make in order to get yourself there, right? And no different that, you know, we ought to do the same thing when it comes to protecting our ability to make decisions, quality decisions around how we manage our cash flow, from a day-to-day perspective. So, hopping into the 5th edition of the Becoming Your Own Banker book on page 26, it kind of leads us right into the very first statement that it talks about, which is, hey, you finance everything you buy. You're either paying interest to someone else or you're giving up the interest you could have otherwise earned. This is 2 sentences. Actually it takes time to chew and think about this particular piece because it's a great reminder. It's like a verse out of the Bible. You come back to it to remind yourself because it's going to urge you to make a decision that's going to either lead you closer or farther away to our happy places.
Yeah.
Right.
And I think it's important to some people when they first read that you finance everything you buy, if a person who pays cash for everything reads that, I think it is very likely that a wall goes up that says, no, I don't. Because I pay cash. But hear us out.
Mm-hmm.
Hear us out.
Yeah. So one of the greatest opportunities that the infinite banking concept can really bring to every North American here is that up until you found out about us or about the infinite banking concept, there was 3 ways in which you could finance everything you buy, right? So I was about to flip you the bird there. Oh, I did. So the first one is, because I was doing this, right? Anyways, so the first one is, oh dear. The first one is you pay cash, right? That's a way you buy something, finance something. The second way is you borrow money. So we either spend money on a credit card, and that's a popular way to do it. I do it all the time because we get points, right? And then hopefully we pay cash to pay off the credit card right away. So there's no interest. But either way, that's still a form of financing because you're really borrowing the money first, right? So you borrow the money to pay for it. And then the third way is to lease it, which is to rent, right? To make payments on it.
Right.
Right. And so that was the 3 most popular ways in which to purchase anything. And the first way, which is paying in cash. So many people of out of the First and Second World War, right? People in their late 50s, 60s, and 70s, 80s, right? They were all, they grew up in a different era. And of course, paying cash was considered the best way. If you can pay for things in cash, you're actually considered doing really, really well because that was the form which offered the most control, which also means absolutely no interest was paid, right? And also made it feel like there was no monthly payment.
Right.
But in actuality, in order for you to pay in cash, you actually had, you were financing in a way. You just had control over how much money you were setting aside until you paid for that thing in cash, right? But then once you pay for that thing, right, whatever it is, right, whether it's for land or it doesn't matter what it is for.
Yeah.
Honestly,
it could be
the
anything.
smallest. Yeah, it could be the smallest thing or it could be a very big thing. But once you pay for that thing in cash, you're literally replenishing all over again because in your mind, your level of success is to make sure money is sitting in the bank, right? It's also your cozy place, your comfort blanket, your security blanket. And it makes you feel good. It makes you feel empowered. And then of course, without having to mention what it means to finance through borrowing something or financing or by leasing, let's just focus on with infinite banking, you come to realize that by paying cash, with infinite banking, there's a 4th way now. We're introducing a 4th way to finance your life, and that's the infinite banking way.
Dun, dun, dun.
And so page 26 is really not all that big. It's literally, if you look at it, it's full of goodness and it speaks to a lot. And it's not something you want to blow through and go, oh yeah, I read this in all of 5 minutes. Let me just go to the next page. It's actually a page that you want to sit with for a little bit because, I don't know, I like the title. If you don't get the basics of this, you may have you may be a person that has a policy, but is not going to fund their, take the opportunity and put your deposit options in because you think, no, like I would rather have money saved at the banking institution and let it sit there until the land is paid off before I add money to my deposit options. Right? So.
And I think too, like, if that's where we're storing our money, what is the bank doing with it? Like, they lend our money out, right? As soon as we put money into an account and we're storing it there, that's how they lend money out. So yeah, I think we have to, really think about what is happening to our money in the place that we're storing it, whether it be a policy or the bank or, as my uncle would say, the mayonnaise jar that he buried at.
No, say that again, because you're laughing through that statement. I can't hear what you're saying.
The mayonnaise jar that you bury out back.
The mayonnaise jar?
Yes, but that's how I say it.
Okay.
Because I'm Texan.
Okay. All right. Yeah, no problem. I was just making sure. I'm like,
yeah.
Did I hear this word right? It's okay. It's with an accent.
People
okay.
actually did that, and they probably still do. Store it in jars. Like, I can remember one time when my granny's like, okay, Lacey, you come here. I need to show you something. I'm like, okay, what are you going to show me? She's like, I have this jar of money. And just in case something happens to me, so you can tell your mom and uncles where I have this money stored. Which, I mean, why is she telling me? I don't know. Why did she tell my mom and her three sons? I don't know. Anyways, she had money stored in a jar, which was great. She was a saver, but was it growing while it was in that jar? Mm-mm. It was just there.
So, what comes to mind? A couple things like, okay, so money is money, and we'd like to it's a mix. We have to, in my opinion, this is why Nelson also included, the human conditions in this book, is because we're all human and our dealings with money are not they're not logical most of the time. They are really emotional, and a lot of the decisions we make around money aren't necessarily for the benefit of it's not all about the best rate of return, although a lot of people would like to make it that way. Right? So again, what your auntie you said?
My granny.
Your granny who shared it with you. It's security, right? To her, it was security, and her ability to feel secure was more of a priority than it was about what's the best use for this over the long haul.
Yeah.
Right? So we have to work with our own humanity, around this, and I totally get it. And it's also good to have and be challenged to think, okay, can I still have my security? Can I still have what's important to me? Can I still feel secure and have my money perform better? And so the next paragraph on this page is creating an entity, which we dive in great length. So we're not going to go into great length about it here. What episode was it, Lacey?
Episode 56. You can go back and listen to our whole dive on creating an entity.
And this is relevant in the sense of what we were talking about. So if you're a person who pays in cash, or if you don't have a policy to help you become your own banker, but maybe you have it in place. You have a policy in place, but you're shy to start changing the gears on your policy so that you can really become your own banker, because you're still living in the mindset, I'm going to pay for, if I have a current debt right now, I'm going to pay off that debt first and then contribute to the policy to make it grow. So having that thought process means, to me, on the outside looking in, because I've been sharing this for a while and you've been sharing this now, and this is you're here because you fell in love with it, knowing what it can do for your family and for everybody else. So it just means that there needs what's required is just a shift in your thinking, because if you're that person who is not contributing to their deposit options but there's money sitting in the bank and you actually have every opportunity to do so, but you're not doing it, it's because you do not understand that you are not giving up what you still want to do. You're still going to achieve the very same objective, except that when you put your money through this policy, it can do more than one job. It's multi-purposed, right? You can actually still pay what you want off in full, and at the same time, and rather than have it just sitting there in your bank account making money for the bankers rather than for you, what you're not maybe perhaps picking up on, as long as you have that money sitting in the bank, right? You may have that emotional security that money is sitting there so that you feel accomplished in getting closer to that goal of paying it off. And you already have delayed gratification, which is great, which I'm sure lends to the success of where that individual is today. But what they may not be getting is that, hey, you're missing out on that money growing for you in the meantime that is sitting there. But you can have that done through the deposit options.
Yeah.
Right?
I have a good example of this. So this week I met with a client who has had a policy for a few years now, and they funded their deposit option in the first year. And then some things have come up, different ventures where their cash flow is going in the past 2 years. So they haven't funded their deposit option in the past 2 years. But what was impressive to this client was the growth that his policy has experienced, even with just 1 year of that deposit option. And so it lit that fire in him because he said, I have plans to fund it again at a certain date or whatever, but it lit that fire. It's like, whoa, that's what it's done. Wow. Okay. It lit a fire for them to figure out how can they do both. And so I think that was really cool for him to see what impact that first deposit option had to the policy, and just proved, hey, I can do more than one thing with my dollar. So it's really cool.
And to add to that, so not only can you never miss out on having that money work for you again, right? So if, again, you can still have that same security of your money sitting somewhere waiting for it to pay for the next land payment, which gets you that much closer to paying off, that thing completely. But it's just, I think it's really just thinking that, okay, instead of just storing it at the bank, you can store it inside an entity in which you own and control. It's still liquid to you. I think that sometimes, again, it's basic understanding. I think sometimes because you don't you're storing money inside of a life policy, which may unconsciously, you may think that, oh, if it's inside of a life policy, but for some reason it's not accessible. So maybe you have it in your brain that it's not accessible, but it is. The ones that we set up, right? That is accessible. It's not the same kind of, the accessibility and the convenience that you get when you're storing money at the bank. Like if you had $1,000 sitting in the bank account versus $1,000 in cash value. Okay. We're not talking you can just, with the click of a button, you can access that 1,000, right?
Yeah.
So, but when it's with the life policy, it's not the same level of accessibility. It's still very accessible. It's just that you have to be a little bit more patient. But we also covered that too, control versus convenience, right?
Yeah.
And choose your heart, right? So coming around to that, it's not only do you still have, you can keep that level of security you want, plus you can still keep your liquidity, a good majority of your liquidity. And there's even a third benefit that you can't get at the bank. That third benefit is
generational wealth. That's probably not what you were going to say. I'm like trying to read your mind right now. Like there's a couple different things you could say here.
Well, the third benefit is like without spending any extra money, because you already had that money sitting in the bank, is that when you put it in as deposit options, you automatically get more, like whoever your beneficiaries are automatically get more tax-free death benefit.
Death benefit. Yeah. Yeah. Which is the generational wealth. It's this generational wealth piece, right? Like, let's keep these dollars rolling.
Okay. And for the person who is like, okay, let's just extend this thought out for extra death benefit. All right. So if you have a fairly large size estate, so, I mean, it really is an added benefit. I mean, this has nothing to do with necessarily becoming your own bank or the infinite banking concept. But if you're like, if you have kids or you're engaged in business relationships, and if you're not really quite sure, but like having the ability to grow your death benefit so conveniently at your control with the same dollar at the same time is completely underrated.
Yeah.
Right? Especially if you're in a business partnership with someone, and especially if you still have kids that you need to think about. So when you graduate to heaven, you're only increasing the opportunity and the choices to those that you are leaving behind for that next generation to have a bigger and better opportunity, to not have to be motivated in having to sell off anything by having that extra death benefit.
Yeah.
You are only doing them more of a favor, because in the agricultural world, especially with land, it only gets pricier.
Yeah, the value increases and each generation becomes a slave to the lenders. But this makes me think of, like, I haven't thought about this in a long time. When I was in university, I worked for a veterinarian, and we had a client who, she was a single lady. She didn't have any kids, but she had a passion for the local SPCA. And I'm not sure what she did for business or for work, but upon her passing, because she passed like whenever I still work there, she was able to leave behind her life insurance and ultimately her estate to the local SPCA, because that's what was near and dear to her heart, right? So, if you have kids, you don't have kids, it's always like your impact, what you build in your legacy can impact whatever it is that is near and dear to your heart or important to you, right? And for her, it was like she rescued dogs and rehabbed them and helped the SPCA, all these things. And that's what was near and dear to her. And for her, that's how she kept her legacy going, by helping them. So, you can kind of tie that all in. I haven't thought about that for a lot of years, but you can kind of tie that all into this whole conversation. It's like, no matter what we do, generations down the road are impacted. And so it's deciding, like, how do we want them impacted, or how do we want to be part of that impact? And like, what do we want to do? Right.
Right. So again, for those of you who are already like, I buy everything in cash, right? Again, you guys have, guys, gals, you all have delayed gratification built in. You have some level of already long-term thinking. So it's just a matter of extending that a bit more and thinking, instead of just like generations ahead, instead of just what's in, like 10 years ahead, or whatever the case may be, or like until that thing is paid off, which leads into the last part of page 26, where it talks a little bit about and it really helps. So like, just because we're doing this book review, it doesn't mean we're saying, hey, you don't need the book. Get the book. It's one of the best financial pieces of education you'll ever get.
Look at all my bookmarks and my tabs, and I have notes written in here.
Yeah, good job. And it's like, at this point, like, you need this visual to refer to, like the one that we're looking at right here. Or I guess if you're listening, I guess what we're looking at. But it's the next part is just really explaining in a very simple format, a very high level overview of like, how do the life insurance companies do this? Right? How do they survive for so long? Right?
Mm-hmm.
They are in a way in the financial world, they are like foresters. They think generations ahead, right? And it's like, how can they honor the death claims when they come up? So, when I'm talking about like, here is a great explanation of like, first of all, dividends. You're eligible to receive a dividend on your contract, the dividend paying whole life insurance contracts.
Mm-hmm.
Well, it's not the same kind of dividend as like an investment portfolio. It's not the same thing.
No.
It doesn't even, in a different class. And in fact, the dividend paying whole life insurance contract is a much stronger asset class than any investment portfolio. Okay.
Ding, ding, ding.
And the dividends in a policy are not the same kind of dividends, again, in an investment portfolio, which therefore means it's not taxed the same. Okay. It's considered, essentially, in layman's terms, it's considered a return of capital. Okay. Especially during the capitalization phase. Now, could it trigger a taxable event when the policy becomes seasoned? Yes, but that's like way down the road, and it's in very certain circumstances. But for the most part, if you never take it out and you never withdraw it or you never do certain things, it does not become so.
Right.
The dividend specifically. But the diagram kind of goes through, how does the life insurance company sustain itself in the sense of making sure that it can meet those obligations?
Yeah. And that's sometimes a question people ask is like, okay, well, if something happens to me tomorrow, the day after I put my policy in force, are they going to pay? Yes. Yes. And how? So explain to them how. How do they pay, Winnie?
How do the life insurance companies pay, or how is it possible that they pay?
How is it possible that they pay?
Or how they can guarantee that they can pay?
Yes.
First of all, this is a general answer, okay? Because actually the best people to really answer this are the actuaries of the life insurance company, right? Now, before I got into this industry, I didn't know what an actuary was. An actuary, though, is like a mathematician in a way, right? It's like they take statistics, very specific statistics, which is the mortality of human beings in a certain area, in a certain group, depending on health. And they have to basically take the statistics of our mortality, our human mortality.
Yeah, they're going to figure out when we are likely to die. Right.
And they need this because, again, insurance companies, first and foremost, they don't care about infinite banking. They don't care. That's not their business, right? Again, infinite banking is a mindset that we are applying to their financial vehicle, right? So to make sure that they can meet the obligations because they are bound by contract law to do so, right? So they take these statistics of mortality and they know exactly, okay, this year, what's our estimated mortality of that? How many death claims are we going to have to pay out this year? Mm-hmm. Right? And they also consider this in their business model about how many new contracts they can actually take on in order to make sure they never go sideways. Plus, interestingly enough too, because they don't operate under bank laws, they can't make up money out of thin air. Okay, which is why Nelson also suggested that this solves a greater issue, which is inflation, which is caused by money being made up of thin air, which our entire banking system is built on, which is every family, every individual that takes place in becoming their own banker becomes a part of the solution of not inflating the money, okay? Because it's inside of a system that can't inflate money by law.
Right.
So what this means is, Lacey, if you get approved today for $500,000, okay, you go through, that's why they go through all of the things to make sure that you are insurable. And if they approve you and you say, okay, yeah, I will pay X amount of dollars to get this amount of coverage. Okay. The moment that you make a payment, right? They already have, like, by law, the life company that whoever you're dealing with has to have like at least 150% more sitting in their account. So they have to have like $750,000 already sitting in the bank account in order to even take your money and approve your death benefit. So if you died the next day, by contract, they already have the money in the account to pay out your pay your beneficiaries. So actually, the longer that a person lives and contributes to their policy, the less risk it is to the life company.
Mm-hmm. Yeah.
And whatever monies that you're paying into the policies are actually helping to build the fund for future generations.
Yeah. And so this makes me think, one time sometimes you can get the comment of like, well, if I pay the premiums, but my kids or whoever your beneficiary is reaps the benefits. Okay, yes, that is true. If you pay the premium, if I pay the premium on my policy and when I pass away, my beneficiaries get that death benefit. Yes, that is true.
Well, if you're saying that, it's like, do you like who you're leaving your money to?
Well, yes. So, find somebody you love and cherish to leave your money to, but also
that you're happy to leave the money to.
If we are not the change, then the cycle continues. So I am willing to be the change so that my kids can have a better future, or don't ride the struggle bus that I've ridden, I've had a great life. I'm not saying I've had a terrible life, but if I can be that change, it goes back to that saying, and I've referenced this before. If your child is in danger and you have to jump a mountain to get to them, will you? Yes, I will. So if I can be that change, sign me up all day long if my kids don't have to go through the same struggles that we've gone through.
Mm-hmm. Right. And half the battle too is also helping our children understand how we've helped them, too, so that they, when they are gifted with the windfall of capital,
that they know what to do with it.
They know what to do with it, and they can truly be grateful in their heart that they felt your love in order to do it. They can really appreciate that money. I think people do. They're a lot more intentional. I guess that's the thing that I'm attempting to say, is that people, I feel, are a lot more intentional when they know where it came from and what's happening, or the trade-offs and sacrifices for it. So again, page 26 is just really interesting. It's just really dynamic in the sense of it just really comes back to, hey, these are the things that you just basically need to know and understand, to keep in mind, to really be successful in implementing this, infinite banking into your lifestyle, and how it can really propel you forward, and how it's just like you can achieve all the same objectives as you did before, except you can even do more with it. So,
yeah. And I think, so I just want to, this is probably one of our longest episodes yet, but the last couple sentences on that page 26. In the first paragraph, Nelson talks about the amount of money. So he's talking about the amount of money that's available in your policy at a time. But he says in hierarchy of places where money is lent. So, the bank lends the money. So in hierarchy of places where money is lent, the owner ranks first. So that would be the bank owner. And that is absolute control. So if we can create an entity where we are the owner and we can, we are the lender, we have absolute control. Find somebody who doesn't want that. I mean, maybe there's people out there that are completely comfortable with the banking system and having the bank in control. I'm not. So that is why we went down this road of infinite banking.
And to add to what you're saying, the same type of person that likes to pay in cash, it is about control too.
Mm-hmm.
It's not just about not paying interest. It's also about control, feeling in control. And so again, participating and putting your money inside your policy does not take away from that. You can still experience the same things, just get better benefits.
100%. Yeah. Yeah.
All right.
Okay.
What is the next? How can we end things off today?
Okay, so if you have been here for a while, for our over 70 episodes now, you know what to do. Head over to YouTube, give us a follow, a comment. We love to hear comments from you guys. 5-star reviews on Apple or Spotify. We are now on iHeartRadio. Head over to our website. If you want to dive into the nuts and bolts of what we're talking about, you can head to our website, ranchyourway.com, and that's where you order your book and your journey begins. So catch you on the next episode.
So glad you leaned in with us on the Win A podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.